I'm really excited to bring you together. I grew up into cyber 25 years ago. One of my exits was in cyber a long time ago. And it's really been interesting to see the change over the years. I mean, it feels like nothing has really changed, but of course, everything has changed. And we have this incredible opportunity to play a role in that transformation and in that legacy. And I'm so excited to start the conversation today off on that footprint, because today, of course, we're here to talk about technology risk management. We've seen some new guidelines from MAS for third-party SaaS applications. And this conversation, supported and endorsed by the Australian Trade and Investment Commission. Special shout out to Sharifa Karanisa and her team for helping to promote this event. But she's really provided a beautiful ecosystem and landscape for us to talk about how that impacts us today, how that impacts the business performance that we're able to achieve, and also the opportunity that we all have now post-pandemic to recreate this new society in which we all want to live. So I'm going to first hand it over to you to make an introduction. First, just a very brief introduction of who's here on the panel. We have Wendy, a director in the cyber consulting practice of KPMG. KPMG, as you all know, is a global network of professional firms providing audit, tax, and advisory services. Very pleased to have Elle Lee, Chief Operation Officer at On-Chain Custodian, a global standardized, resilient, insured, and compliant custody service for the safekeeping of our institutional digital asset investments. Welcome, Elle. We have Eric, who's a senior lecturer in data science at James Cook University, a world-class university ranked in the top 2% of tertiary institutions in the world. And Eric, I did an impact assessment today on if we could just train 100 people in data science per year, what would that actually mean to the individual economic contribution of that human and their ability to earn money on the planet? And it was more than $1 million for the term of their natural life in additional salary. So there's some incredible impact that you're making at James Cook University. Congratulations. And then, of course, finally, Yusan Chu, co-managing partner at Yusan Audrey, a pioneer in IP strategy and law here in Singapore. I've had the great privilege to work with Yusan on the bleeding edge of cryptocurrency, and so excited to have you here with us today. And Tan, co-founder and CEO at Dexterian, who's made this panel possible. Dexterian are a leading Australian cybersecurity company specializing in security risk governance for SaaS applications. And we're pleased to shout out that we're also a customer. So without further ado, I'll hand it over to you all to make your own introductions. And perhaps I can start the panel today with your own introduction, Tan.
Hi, everyone. It's a pleasure to be here. And thanks, Lisa, for moderating this event. So I'm a co-founder and CEO of Dexterian, and we specialize in helping companies that use SaaS solutions, Office 365, G Suite, Salesforce, and many others, to stay on top of security and compliance risks. And our customers are mid-market businesses in regulated industries, and we have clients in Singapore operating under MAS regulations.
Fantastic. And Tan, I had the great pleasure to meet at the IAG Firemark Accelerator supported by the Australian Landing Pad. It was basically taking on the transformation of Southeast Asia's mid-market cybersecurity companies and transforming their ability to comply and secure their companies. So what a great mission, Tan, and really great to see you partnering with IAG Firemark to do that en masse. I'm now going to hand over to you, Yusan. I think everybody on this call knows you anyway, but please, just for the purpose of the introduction. Oh, you're on mute.
Yeah, these things are tricky. Well, thank you, Lisa, for inviting me, and thank you, Tan, as well. I'm a founder and co-managing partner of Yusan Audrey. We're a specialized IP, intellectual property, and corporate law firm based in Singapore. So my areas of practice include corporate and commercial law, IP law, and technology law, with a special focus on commercialization of IP. I also advise on securities, financial regulations relating to payment services, capital markets services, financial advisors, fintech, and of course the blockchain crypto stuff that's coming up right now. In other transactions, I also do IP financing, IP-based M&A, which is becoming more and more important. and private equity transactions as well. And I'm also a board member of Access. Thank you.
Fantastic. Thanks, Yusan. And just for those that don't know what Access is, can you just share a quick one-liner?
Right. So this is, we always get asked, what does Access stand for? It's formally, it's supposed to be the Association of Cryptocurrency Enterprises and Startups Singapore. It's a mouthful, but basically it's the main industry association representing companies that are in the crypto space. I think that's probably the best description of what Access is.
Fantastic. Thanks, Yusan. Great to have you with us again. And Eric, over to you.
Hi, Lisa. Thank you. My name is Dr. Eric Tam. I'm from the James Cook University. So I am a senior lecturer in data science. I would introduce myself both to be a practitioner, a blend of 16 years of practical experience in the financial sector. I was even in the fintech sector in China as well for a couple of years, not too long ago. And for this seminar, I would like to both contribute from a practitioner aspect and from an academic aspect as well. So one of my passion is really to, I think Lisa really encouraged me just now, is to really train the next generation of data scientists so that they can be of good value and make contributions to the society. Thank you.
Fantastic. Thanks, Eric. Right now, we're doing a survey across Southeast Asia of the 21st century skills for the next 10 years. And I could almost guarantee that data science will be on it. So thanks so much for being here today. We really appreciate your voice in the conversation. And Elle, over to you.
Thanks, Lisa. Good morning to everybody. This is Elle here. Formerly an investment banker for almost a decade. And then in 2016, I started out my journey in the crypto space as an investor. Went through the crypto market boom and bust in 2017. We saw how retail players were played out during that period of time, and we realized that we really needed to introduce institutional monies into the market. That's when we co-founded On-Chain Custodian as a company to provide infrastructure and wallet services and custodial services for institutional players. And I think it's been quite a journey for the last 2.5 years building out this company. Today I sit on the board, also the CEO of the company as well.
Fantastic. And thanks so much for joining us here today, Elle. We know how busy the crypto market is right now and just how many institutional players are trying to jump on the bandwagon. So I really appreciate you taking the time. So, today we're here to talk about some changing regulations in Singapore. And I think, Wendy, there's no better person to kickstart this conversation than you. Can you explain the details of these new TRM guidelines for FI and also the third-party providers to the financial industry? Obviously, the key component of these revised guidelines is about reinforcing the importance of incorporating security controls in technology departments and delivering life cycle risk management as well in the deployment of emerging technologies. But what does that really mean, and how does it affect us as small, medium enterprises?
Sure, Lisa. Thank you for the questions. First of all, I must say that when we look at the MAS technology risk management requirements, it's been around for like almost more than 2 decades. And if you look at what the guidelines are trying to address, and they are actually applicable to all financial institutions in Singapore. Now, one thing is, it is very unique in Singapore that we have one supreme FS regulator, and that is the MAS or the MAS. So all financial institutions, what it means is that it will include banks, insurance firms, asset management, brokerage firms, as well as payment services firms. And it should be noted that, because of the revised Payment Services Act, more and more organizations are now going to be regulated under the new Payment Services Act, and in turn will have to comply with MAS TRMG. I've been advising clients on this topic for the last 10 years. And I must say that when you look at the different maturity levels of financial institutions, it ranges from it ranges from a big spectrum. But if you look at really in short, all regulated FIs must comply with the technology risk management guidelines as well as the other related regulatory requirements that are put up by the MAS. So if you really look at the transformation, aspect of financial institutions, and in fact, in the last 1 year, many organizations, including the FIs, have actually accelerated their digital transformation. And because of that, as well as the reliance on emerging technologies, such as cloud technologies, APIs, agile software development, the new update to TRMG is really to address such new developments as well as new technologies. So when we look at the new TRMG, as the industry will fondly call this in this aspect, there are a few revised and new expectations from the MAS. I'd like to touch upon 4 key areas very quickly. The first one is actually the foundation and very fundamental technology, governance, and risk oversight. This actually includes a key change whereby the board of directors and senior management will now need to approve key appointments to actually strengthen the governance and management of technology and cyber risks. Such key appointments are actually explicitly called out in the new requirements, namely the Chief Information Officer or Chief Technology Officer role, CIO or CTO, or you can call them also the head of IT, as well as the Chief Information Security role. And what this also means is that this is also the clear indication of the MAS, whereby they expect that all financial institutions are now required to strengthen their 3 lines of defense. Second point will be third-party risk management, as you rightfully pointed out. There is a major change, and it will impact all the third parties that are going to or are already engaged with financial institutions to provide services in one way or another. With the increasing reliance on third-party providers, the FI ecosystem now extends beyond the boundaries of the FIs, and that is a concern of MAS in light of recent developments and trends in the cyberspace. Thirdly, security requirements for project management and development practices. These are enshrined in the new chapters, whereby security by design, DevSecOps, agile development are called out explicitly as new requirements for FIs to comply with. And then finally, I would say the emphasis is really around cyber resilience. It can be seen in the new guidelines where 3 dedicated chapters or sections are actually focusing on security and cybersecurity aspects. Now, you must all know that the MAS TRMG and the MAS requirements on technology risk has always been a security, likewise a cybersecurity regulation. So it has always been the emphasis of the regulator to actually protect, safeguard the financial ecosystem. So with the new chapters, what this means is actually that, other than just having basic security controls, cybersecurity surveillance operations, that means your SOC operations type of a setup, as well as the need to actually conduct cyber assessments that are beyond your traditional VAPTs, vulnerability assessment and penetration testing. The emphasis is on adversarial attack simulation exercises, which is what we called red teaming as well. So with that, let me just really conclude this part is that really in light of the recent spate of cyber attacks on supply chains, which actually targeted multiple IT service providers, the FIs are also now implicated because they have been outsourcing and they have also increased a lot of their outsourcing and reliance on third parties. So what this means is that FIs now have to conduct more rigorous risk assessments and due diligence actually before they engage with any third parties. In addition, FIs are also required to enforce a stronger vetting process to assess third-party suitabilities in connecting to them, especially if they're using APIs, given that APIs, as mentioned, is one of the key technologies used. Finally, with these revised MAS TRMG, we can see that third parties that are working or are intending to work with FIs will be subjected to even more stringent assessments as well as compliance requirements.
It sounds very expensive, Wendy, is what I know everybody in the ecosystem is thinking. MAS obviously have some incentives to help them get started, right?
Yes, I can talk a bit more later, but in Singapore, especially when we talk about the fintech community, there is the Fintech Association in Singapore that has been actually working, it has been working very closely with the fintech community as well as the regulator to try and, I would say, inspire and encourage the fintechs to adopt various, good controls to actually service the financial institutions.
Fantastic. And I do recall many people in our ecosystem talking about up to $120,000 in reimbursement on new softwares in order to implement such tools and technologies. So that's really, I think, a godsend for so many people who in this time of great constraints in the pandemic are finding it hard to think about how they transition to that next level. Fantastic. That was really clear and helpful. So just to summarize, we have technology governance and risk oversight key changes. We have a focus on third-party risk management. We have new security requirements for project management and development practices, and we have a new emphasis on cyber resilience. This is really important, and thank you so much for helping us synthesize what is a rather robust requirement document. Now, over to you, if we just move forward on the conversation. Yusan, you've really been a great mentor and guide to myself and many of the companies that we work with. Can you share more information about the legal risks? You know, as a general partner, I have unlimited personal liability in my limited liability company, and I'm a mother at the end of the day, and I don't want to ever go to bed in an orange jumpsuit, as they say in the US. Can you tell me how I protect myself and my firm moving forward?
Sure. So I'm a lawyer, so I talk about legal risk. Well, what is important to realize is that, yeah, it's really a lot to deal with, but I think where MAS is coming from is that when they are providing these guidelines, they're basically what they call best practices, okay, for the institutions that they are essentially prescribing for, okay? So I think it's important to say, and MAS is not going to like this, but they say this in their own website, and this is true. They're not observing MAS guidelines is not a criminal offense. So don't worry about the orange jumpsuit. And it also does not by itself attract civil liability, okay? However, MAS does expect institutions to observe the spirit of the guidelines. It's interesting that they talk about the spirit of the guidelines, but in the case of the TRM guidelines, it's really, really specific about these things. But that doesn't change the fact that TRM guidelines are just that. They're guidelines, they're not mandatory, nor do they have the force of law. But before we all heave a sigh of relief, that said, non-compliance or not being able to demonstrate that you have a certain level of technology risk management policies and systems in place may affect your ability, if you're an FI, to obtain or maintain your regulatory licenses. Yeah. So, for example, in the applications, regulatory licensing applications I'm working on, MAS is routinely asking about TRM policies when they are processing these applications. Now, in addition, failure to comply with TRM guidelines may have an impact on the overall risk assessment of these financial institutions. So where they do not manage the risk, especially if it's relating to AML and CFT risk, and increasingly, I think these things are converging. And if they don't manage their risk to the standard that is required, then MAS says that they will take appropriate action against these institutions, and these could include a slap on the wrist, warning and reprimand letters. Yeah, it may go on to include things like restrictions on your operations or your business activities that you're licensed to carry out. And at worst, it could also result in financial penalties or even revocation of licenses. So you can see that MAS has really gone into a lot of detail, and Wendy has really summarized it very, very well, I must say, because there are so many new aspects that need to be covered. Now, so the thing is, with this level of kind of prescriptive requirements in technology risk management, number one, you can see that MAS is taking it very seriously. And number two, I would say that while non-compliance with TRM guidelines does not by itself give rise to civil liability, and in this case, we are thinking about things like statutory, liability in tort, for example, for breach of statutory duties. Yeah, so that does not happen directly. But if the customers of the institution suffer losses, for example, if they were hacked or if there was a breach of security and they suffer loss as a result of failure to meet those standards that are prescribed in the TRM guidelines, then there may be a basis for a claim against that institution for negligence and not fulfilling their duty of care to the standard required.
Now, I promise to be provocative, Yusan. I had the great privilege in Malaysia a couple of years back to be on a panel with Andrew Fastow. If you remember Enron, anybody, maybe I'm showing my age here, but if you remember Enron, he was the chief loophole officer / CFO who was actually jailed for 6 years for breaking the spirit of the law. So I am still nervous about those orange jumpsuits, Yusan. What do you believe from an SME's perspective is the right legal risk management measures that we need to take in order to mitigate that risk?
I think the corporate culture has evolved quite a lot since Enron times, and I think a lot of the what it has provoked is a lot of legislation actually to kind of try and solidify these rules. But I think also the examples made of these officers who were, I think the attitude then was, well, let's see how much I can get away with, and so they would lawyer up. I'm sorry to use that term, I'm a lawyer. And then ask the lawyers, how little do I have to do to get away from, to get around this, or to get, to avoid certain types of, the need to comply. Yeah, that was the attitude then. I think the sort of culture has shifted to how do I comply? But that has also been combined with greater and greater supervision. I would say a lot of regulatory authorities have become a lot more activist. And then you can see that actually in the TRM guidelines, how detailed and how prescriptive they are. And so correspondingly, it's become harder. And the reason why I think the Enron executives, as well as I think a couple of partners of the former Arthur Andersen were incarcerated is because there was an intent, to get around things. There was an intent to defraud. There was an intent to essentially cover up things. So that gave rise to criminal liability. Yeah. Whereas here we're talking about meeting standards, and generally I would say financial institutions want to show that they are trustworthy, because at the end of the day, the financial industry is built on trust.
Yes.
I know we are talking about trustless and in blockchain and things like that, but it's still based on trust. Whether you're trust, so if the trust is based on institutions, then the compliance behavior has to be of a certain standard, I would say.
Wonderful answer. And I specialize in reputation risk, and we always talk about a legal and regulatory license to operate, but also a social license to grow and innovate. So yeah, really great points. And thanks for reassuring us as well that, the future can be rosy without the stressed nights laying awake, wondering if my penetration test is going to work for us or not. All right, I'm going to hand it over now to Elle Lee. Elle, you've been on the pointy end of this, right? You're living on the bleeding edge of regulatory landscape as well as compliance. How are things going from your perspective? And where do you think the adherence opportunities or challenges are?
Yeah, I think both Wendy and Yusan has highlighted how TRMG is a focus point for the regulator, the MES, especially towards licensed applicant. And on-chain custodian is one of those applicants as well for the payment services license. Now, when we look at this and we treat it very seriously, the idea here is custody business at the end of the day, it's about trust. And I echo that from what Yusan just said, in how this business, especially financial business and industry itself, trust is the core thing that we go after. I remember when we first started the business, 3 years back, when we tried to ask institutions to place their asset with us, one of the questions is, how do we know you're not going to run away? How do we trust you, right? And over the years, what we've come to realize is actually adherence to TRMG actually strengthens our security around our operation. It also helps to boost the credibility of our business, especially when we tell clients that, look, who is and will be regulating us and what kind of guidelines we've put in place. And they can clearly see, you know, the stringent clauses within TRMG itself and what we try to adhere to. And that actually helps us. And the very nature of our business is relying on technological security. So we definitely, as a firm, take a very serious view on TRM. So if we think about it from a business perspective, adherence to TRM actually helps to prove that you're able to achieve certain standard that the regulator has prescribed as the best practices in the industry. And that actually helps to give assurance to your clients, even Lisa yourself, that your asset will be safe with us if you choose to open an account with us, of course. So that actually helps us from a business perspective. So we don't view it as so much as just a cost that we're bleeding out because we have to adhere to guidelines, but we see it as an item that we spend on to assure that our clients get the best security they can get. Now, I think for the viewers and the participants on this webinar, just to share a few things, what I think the regulator is very much focused on during our journey of license application, right? And one of those is actually UAM, which is user access management, you know, in section 9. When you look at the whole system that you've built out, have you actually granted access only to the rightful people and people who should have access? Meaning, for example, at a backend database to access client's name or sensitive data, who has ultimate control over that? Have you got in place a maker-checker control as well? Those are very key to adherence to the TRM. Now, in terms of from a crypto player perspective, now everybody knows that the cryptographic key management, it's key as well. So from our perspective, we've utilized and worked with IBM, you know, for a high-grade HSM solution. But this will be one of the key focus from regulator perspective as well. How are you safeguarding the cryptographic keys and preventing a situation of hack from happening, right? The last thing, and Lisa, you just mentioned about penetration tests. I think that's one of the most basic things that even some of the industry applicants, honestly, I think have not put in place. And before you even start the application process, please make sure that your whole system and your source code has been audited and gone through penetration tests. I think that's the most basic thing you should do before submitting for an application. So this is just some of the basic stuff that I would like to share with the viewers and audience that you should get in place before kicking off your license application.
Fantastic, thanks. And you know, as one entrepreneur to another, it's those secret tips and how we can get there faster that I think are the most valuable. So for all those fintech entrepreneurs and pioneers out there, Elle has some fantastic advice for you. Now, look, one of the challenges that I often see, and I've seen for the last 20 years, and this is why I don't think anything has really changed, right? Because I don't know, 20 years ago, as I was growing up in this space, everyone would do these point-in-time audits, and you get this long list of all this stuff that you had to do that you could never afford to do in order to get a secure risk position. Now, obviously, we've got pioneers out there in the world changing the game for us. I'm going to hand over to you, Eric, first. Tell me, from your perspective, how are you seeing the landscape change, and you know what comes next?
Hi, thanks, Lisa. You know, when you talk about 20 years ago, I was thinking, I've been there about 20 years ago too. We're in the same boat. But anyway, what I'll be talking about today is both about the history and about the present, which is the future, a historical evolution of how things has become. 20 years ago, it was not technology risk management, it's operational risk management actually. And even now, the BIS, the Bank of International Settlements, which is the world central bank, they do not call it technology risk management. They still call it operational risk management. But things have changed over the last few years. We all know that technologies has advanced a lot. We have big data, we have blockchain, we have deep learning. So the term has been coined differently now. And regards to this, we all know in the past, in the FIs, things were a bit more manual. You have Excel spreadsheets and a lot more processes and systems. Your change has got better now, but the technology has changed it to a certain extent. But I believe there's one element that did not change. And what is that? And that is the behavioral aspects. Having heard from the previous three speakers, I feel that our viewpoints have come like converged. Why the behavioral aspects? If you look at the breaches in technology over the last few years, it is primarily due to the behavioral aspects, whether you call it human error, human negligence, but it still constitutes the main reason for such breaches. Now, that's not to say that the hard aspects, the technical aspects, or the technical aspects doesn't matter. But the truth of the matter is that for such solution providers, when they tout the solutions, their technology is good. Otherwise, they won't be there. All right. But many people do not know that it is actually the soft aspects of the technology. That again, I echo Ellie here. That really matters. Take an example, blockchain. Blockchain is trustless. It's supposed to be the technology and all that. But many people do not understand that blockchain is an ecosystem. It's ecosystems of the different moving parts. Now, I won't dwell too much into it. But because it's an ecosystem, it is only as strong as the weakest link. And this weakest link could just be someone entering something into the system. And that's where the breaches can occur. So, and that's where human agents and human errors can occur. So that is for the history. And coming to the next thing, talk about the future. The future is now to some extent. And we all know about fintech. It's really about technology and technology companies enrolling into the finance space. Last few months, we have Grab and Singtel. They have been awarded the digital banking licenses. Now, compliance, risk management are the norm for FIs. It's like they are the bread and butter. They have huge departments, compliance, risk management, middle office, valuation control, and so on and so forth, which are huge cost center for these financial institutions. But this is very alien to the technology companies. I hear from Wendy just now is that it's going to blow a hole. But how would technology companies react to this? I think this is something that is still evolving. I don't have an answer for it. But coming to the point, if this is about a future, then what is the difference that we can learn from? And I think we can learn, the key difference is legacy systems. Many FIs, they will have legacy systems. And legacy systems is something that has been pointed out in the MAS document a lot. On the contrary, the technology companies do not have so much of such legacy baggage. Bear in mind that if you are going to have the risk management on both the legacy systems and new systems that will come in, you will have UAM, UAT, and all these things mentioned by Ellie or something. So it's going to be a bit more involved for financial companies and less so for tech companies. So that's my point. The future, how we evolve is still a question mark, and something that we can learn from the past as well is operational risk management. Thank you, Lisa.
Very good. You know, there's a philosophy that humans never forget. And what we're often asking is for our humans to change. You're an expert in transformation of humans in your work, Eric. How are we getting that? Because we're doing that digitalization, right? That end-to-end transformation of the business process or the business model. But actually the key success in digital transformation is the transformation of the humans around the transformation of the business model and the business process. How do we achieve that if humans never forget?
Well, you tell me about it. You know, when you said I transform humans, I was thinking, I can't even transform my wife, you know. I'm sorry. Okay. Anyway, I think it is about the culture, the organization culture, and the accountability and the incentive systems. And I think that's a big part of the MAS document. A lot of it was talking about the organization structure and the framework. We cannot, you know, we can lead the horse to the river, but we cannot force it to drink. Yeah. I think that's what the document is essentially trying to do. We have the structure, the framework in place, and hopefully that does its job as well. Thanks.
One thing that the fintech is doing really well is moving everyone onto the platform economy, right? And what's really exciting about that, if you think about the work of Sergey Netizin at INSEAD, he's now obviously out of Georgetown in the US, is that he always said that the way that you get disruption in an industry is that transformation end to end of the information asymmetries in a value chain. thinking about how through our products can we transform who makes the decision, where it's made, when it's made, why it's made, and how it's made, but getting that realignment of incentives in the process. So I think you hit the nail on the head, Eric. Not only can we get the change management, but we can also get a really exciting and disruptive business model in this new age of the platform economy. Very exciting. Now, over to you, Tan. You know, I run a small venture capital firm and professional services company in my ecosystem. I have people spread across the planet. I have far too many SaaS systems across my ecosystem. I was definitely losing sleep. And then I met you guys and you kind of gave me a silver bullet. Why is it a silver bullet in your mind? You're the one inventing these things for my desired customer experience. What is it that you thought about in the creation of your product and how it was going to deliver on these pretty arduous demands for SME businesses?
Yeah, thanks a lot, Lisa. That's a very good question, a good segue to what Eric touched upon as well, which is the cultural shift. I think there's a massive cultural shift in the way technologies are procured and managed at the workplace. So in the past, we saw technology being centrally managed by IT, but that's no longer the case now. Business teams procure and manage their own software solutions, their own business systems. And the majority of the business systems that business teams procure and manage are SaaS solutions. You know, we're very familiar with Office 365, Office 365, G Suite, Salesforce, Slack, and the like. They exist in every business, and the adoption rate at the moment outpaces the ability for organizations to keep track of what's going on, keep track of risk. And the board and management, even though they have the good intent, they do not have the data insights in order to make an informed decision into what to do.
Yeah.
So questions that are we meeting compliance requirements? How do we track changes in progress? What blind spots do we have in terms of security and operational across the different business teams and our SaaS footprint? And simple question like, are we using what we're paying for, right? Because SaaS can can sprawl and you lose track of it. So it's a big item. It's a big problem at the organizational level. There is just no oversight of risk. And if you look at the average business, actually the sensitive data is only stored inside 10 to 20 SaaS applications. And unauthorized changes in users' access, data sharing, as well as their security configurations can expose your company to data theft and compliance breaches. And a lot of these misconfigurations actually cause accidentally, they might not be malicious at all, but without the oversight at the organizational level, you can be seriously at risk. And previously, to mitigate these risks required costly and resource-intensive manual audit of all these platforms. Yeah. And most businesses just don't have the time and the knowledge to do that. And so our mission as a company is actually to break down the barriers to understanding of these risks at the board and management level, so people can understand what's at risk and take mitigating actions. So that's the very first step. And sometimes it's very hard to take that first step. And our motto is bring simplicity to security so that business users can understand it, because only when they understand it will they take actions, right? And it's a whole shared cybersecurity model now. It's no longer just someone in the organization, it's across the board. And so what we help customers now and SaaS-powered businesses is we provide a platform for them to report and track the good, the bad, and the ugly in SaaS security risks, so that the board and management can then have data insights to know what's at risk and take the first step of mitigation. And in relation to the TRM guidelines, we provide board and management with continuous risk reporting, review, and monitoring capabilities through our reporting platform. And we provide IT team with access, configuration management, and audit capabilities for them to always stay on top of SaaS applications. And if you like to know where you stand in terms of SaaS security and compliance risks, with our platform, you get that visibility and data insights to contextualize the risks and mitigate. And we're very honored to be supported by Austrade in Singapore and endorsed by AusCyber, which is the industry body for cybersecurity in Australia. So we love to have people reach out to us after this webinar to see how we can help.
And I have to say, Tan, you've really helped us. We're a deep tech venture firm that invests in some of the world's most exclusive assets, right? And many of these deep tech assets have military use case applications. We really have to be extremely careful with not only who has access to that data and the information, but also how that information is stored and shared and its sovereignty in our ecosystem, my corporate ecosystem. I wanted to achieve lifecycle risk management. I was a born believer, right? Having come from the old Sarbanes-Oxley days. And I didn't know how I was going to achieve it in our company. And I'm pleased to say that, you've made a very significant contribution to helping us achieve that. So thank you.
Thank you.
Now, without further ado, I'd like to open the floor to questions. And we've got some fantastic questions here from our audience. Dr. Eric, there's a great question here from Raghu. Raghu asks, which blockchain platform would you recommend to us? And I don't know if he's asking for an investment tip here or if he's really just asking for a technology architecture tip. Maybe Raghu, you'd like to clarify that, because maybe Elle is the right guy to give that answer. But can you please specify the risks of security breach in a blockchain network? He's looking for investment tips. I'll hand that over to you after this, Elle. Eric, you're just on mute.
Eric, you're mute.
I don't think I'm in a position to recommend, objectively, I know that there's a few like Ethereum, which is where the Bitcoin is based on, and R3 as well, Coda. I think that's where Lisa is from, and IBM also has got very good, Hyperledger is a very good system. So these are the three main systems that are, and I think, I can't say one is better than the other, that each of its own pros and cons, and you really have to measure, in this case, which is the appropriate for use. But I understand it's investment tip. I think we have to separate blockchain and cryptocurrencies very carefully in this case. I can't offer any investment tip on cryptocurrency. It's all to say that it's very behavioral in nature. And sorry, Lisa?
I was going to say, Eric, there's a little mass regulation that comes in here that I'm sure Yusan is smiling about. Got any recommendations on some legal advice for giving investment tips on public webinars, Yusan?
You shouldn't.
No. So yeah. Anyway, I'm not in a position to either. Yeah.
Excellent. And look, that segues to a group of questions that we've put together here from our users. Wendy, you mentioned that FIs need to conduct assessments on their service providers, their third parties. How does that affect fintech or those working with FIs in the way that they approach their own security governance?
Yes, Lisa. Obviously, I think when we talk about the level of compliance, if you look at it from a compliance angle, it does seem a lot more now. But when you look at it, it is for the benefit for the entire ecosystem. And that's why there is more stringency in terms of the regulatory requirements. So in short, what this means to the fintechs will be, they will need to actually work very closely with their FIs. Even though FIs are very stringently regulated, a lot of them do empathize with the business partners they work with. Having said that, FIs still need to demonstrate their technology risk governance and oversight in terms of when they're using reliable third parties. In this case, it could be fintech companies or fintech partners they work with, because they will come under the definition of third parties with the new release of the MAS TRMG. So I would actually recommend that fintechs will need to look at this as an open mind, and work closely to understand, if let's say, depending on the activities that they are actually providing to the FIs, it doesn't mean that they need to be, looking at the entire compliance. There is an overhaul, but they should be looking at what kind of activities or what kind of objectives that they're actually providing to the FI clients, and work closely with them to ensure that they helped FIs to address their regulatory obligations, but at the same time, also look at strengthening the security of the entire ecosystem.
And to your point, Wendy, we have always been a rather underinsured market in ASEAN. This new concept of security assurance is an important one. Do you think security assurance is going to become a norm in the future in order to conduct business?
With the recent developments and in the increase cyber breaches due to supply chain and third parties, given that all the news has heightened this risk right now in this current situation, I would say yes. And you can see that in Singapore with the non-MAS regulators or authorities, such as even with the Singapore government and the Cybersecurity Agency, looking at strengthening supply chain cyber risk.
Yeah.
And also with the release of the Cybersecurity Act a couple of years back, the essential services are already mandated to be audited. Rather, meaning they have to be audited against the cyber requirements set forth by the CSA. So that level of assurance increasingly is much needed. I think based on what the other speakers have shared is to ensure that the space that we are working in and the ecosystem that we are operating in continues to be trustworthy. I think that's why it's driving the security assurance in Singapore and likewise other parts of the world.
Fantastic. And security assurance often results in a insurance risk reduction. So that's an exciting opportunity for people to think about as well. Now, Elle, as one pioneer to another, how do you see the future of security assurance and how is that going to impact your business?
No, it's interesting you mentioned the point that we're underinsured in Asia, and what I always love to share in webinars with viewers or listeners is this. So 1.5 years ago, I was giving a talk to a group of about 20 insurers in Asia. And the kind of question that we get is actually, how do you insure something that doesn't really exist? It's not like an artwork, you can touch it, feel it, lock in a vault. And what process do you put in place to ensure that they are not stolen? How do you ensure it's the same piece? Nowadays, of course, you got NFT and stuff like that. But 1.5 years ago, that was the kind of question we got. Just late last year in November, I was at SMU speaking to a few senior management of insurance company as well. It was a lot easier, the conversation. People understood what is Bitcoin, why it doesn't really exist in the world in physical form. And the conversation was more around the areas of who's in the industry is now insuring the asset, what kind of rates are you looking at in the market. So they are more they're more sort of open to discussion around insuring assets like that these days. So that's the change that we're actually seeing on the ground. So what you're seeing is that more offering are coming into the space, better sort of insurance policies, and cost is being reduced. So those are the three key things we're actually seeing in the industry. So from my perspective as a practitioner out to the other crypto firms that continue to drive towards getting insurance for asset under custody or on platform or in your wallet, because costs are coming down. So look at that. There is room for negotiation. If you had a negotiation or talk with insurers 1 year back, the landscape has really changed. So feel free to reach out to them for a discussion again. And I think it will continue to exist in this space.
I used to run this class at SMU. It was about cybersecurity hacks, right, in our ecosystem. And I used to ask at board level, who has 20 million in Bitcoin to pay that ransomware actor? And no one in the room ever had any mechanism. But I just realized, Elle, you finally give me a mechanism to pay my bad ransomware actors. Mental note, never do that, right? We definitely don't want to create that industry. But that's a really interesting phenomenon because I've been teaching that session for about 6 years now in the region. And that's a phenomena that has really significantly changed at the Institute of Director level, right? Because before I'd ask the question, and no one could even fathom how they were even going to get Bitcoin into their company. But actually, you've got an entire platform that facilitates trade and exchange in cryptocurrency. Can you tell me, how have you seen that transition and what do you see has been an influence or impact on the role of directors with cryptocurrency moving forward?
Yeah, so from my perspective, we look at the market, we just saw Coinbase got themselves listed yesterday, and I think that's a phenomenal milestone for the whole crypto industry that crypto players are getting recognized. And Coinbase started out, if you read how Brian and team started out, was really to create an on-ramp for crypto either holders or investors, from fiat into this space. They did that back then, I think, for some institutions, for some retail players, for themselves. But today we're seeing real institutions coming into this space, and they're looking for ways to ramp on, meaning convert their fiat into crypto. And then the question, of course, they ask from a smart fund manager perspective is, where's the liquidity? How do we get out when we make money, right? So we also provide the off-ramp service for them. So once you have on-ramp and off-ramp, anything in between is possible because you really provided the gateway between fiat to crypto. Right. In between, today the market is so dynamic. There's lending, borrowing, there's asset management. There's a lot of fun stuff that people can play with, options, futures, and stuff like that. So the message to the audience over here, it's really, the crypto space is not just simply buying Bitcoin, holding and praying and hoping that it will go up in prices, but it's really dynamic. There's a lot of stuff you can do, a lot of financial activities going on right now. So if you haven't started exploring, you should. Even in the space to touch base on the auxiliary stuff like artwork. Nowadays, there's non-fungible tokens, and I just wrote a piece about that recently. Welcome people to connect with me on LinkedIn to sort of read that. But I think from a board member's perspective, when I look at company and the fintech space going forward, dashboard and ability to sort of monitor your company, it's very important, even for a director, because you're ultimately liable for the company's operation and all the risks, right? So SaaS monitoring tools like Dexterian's actually helps you. I mean, there are other tools out there, but in short, you need dashboards like that to help you to monitor the company, the residual risks, and any loopholes that you sort of need to patch and get a team to work on that.
Fantastic. Now, Eric, you laid down the law earlier that the biggest risk is us as humans in this value chain. I read this report some years ago that Ernst & Young had published, which was 4% of the employees that will come to work with me actually come to do me harm. That was terrifying, right? I suddenly looked at my screening of candidates very much closer. And we talk in Asia about more than 300 days time to detection, which means that these actors already live with us. They're just not active that we know. How are you looking at this challenge of human negligence, and even not just human negligence, but human, human influence on our organizations?
Thanks, Lisa. Your statement definitely strikes me. I'm looking around my office now. anyway, human negligence. I like to see that it's really the unknown knowns that matter in technology risk management. And I understand that the TAN, they do have a system to have to kind of like to simulate things that the unknown risks. And that's because a lot of the breaches are results that if you have known it earlier, it will not happen.
Yeah.
The trouble is that you do not know, obviously. So it's really the unknown knowns. Now to that, I think that to counter or mitigate human negligence is really about human expertise, rather training with the expert staff, in the party solution provider or within the FIs themselves. I think that's where it would reduce this unknown factor. So another area would be simplification. I think that's where there's a lot of things to talk about, about the understandability or explainability of AI. I think technology itself cannot be so complicated in such a sense. I think this is where actually the previous few years, many solution providers have simplified the process flow, has simplified the systems compared to the past. Because in the past, there were too many legacy systems all trying to come together. But now if there's things are getting a bit more convergent. So 2 things. One is on the human expertise, and another thing is on the simplification and explainability of the solutions, technology solutions. Thanks.
I love what you said about simplification. I actually had an employee come to tender his resignation because I was giving him yet another tool to learn. And we just have far too many tools in an organization, right, to execute. And I'm so excited because this week I'm throwing half the tools out and I'm implementing one ring for all mankind in my company. You can't imagine how exciting that is for half of my team because it's exhausting, right, trying to get your head around all of these platforms and systems. Yusan, you're the man who has had a good place in my heart for so long now. You keep us out of those orange jumpsuits. I'm going to hand it over to you for some final words. How could FIs ensure that our third-party accountabilities are spelled out, and that they're transferred appropriately in contracts with their suppliers going forward. And I want you to consider here, we can't always contract out the risk, right? Tell us how we can manage some of that reputation risk element as well.
Wow, that's well, I wish I had the magic bullet or the silver bullet that could solve that problem. I think that what Eric is talking about, to try and go towards simplification, that's something. If you can achieve that would be fantastic.
Yeah.
But I think that the reality is, though, that with the speed of change, we want to aim for simplification, but it's going to get more complex. And I think it behooves the senior management, all the way up to the level of the board, to really have, develop that understanding, about the risks and how they can be managed. I mean, of course, nobody expects the board members to go down to the level of detail, that level of granularity, to know exactly what platform you're using, what it does for you, what the features are, and so on. But they must put in place a governance structure. And I think that's also what you see in the TRM guidelines, that they are defining more and more the need, not only that, oh, you're responsible, this buck stops with you, but to define a framework around which financial institutions can build a team. I think that's the first thing that will help them do that. And I can speak from experience, because are now on the attack, right? So starting from the big leak from that law firm disclosing lots and lots of very salacious details about people's financial dealings, right? And we're also getting starting to see cybersecurity insurance coming in, right? So to the point of cyber insurance, but the buck stops with us. So with us, we are a general partnership. So it's unlimited liability. It's really, really scary. So insurance is part of it, but really the responsibility still lies with senior management, with in our case, the owners of the firm. And we're having to get help in that, getting the right tools, but also the right people.
Yeah. Thanks, Yusan. And it's always been a challenge in Singapore, right? We have a finite population, we have a tightening MOM regulatory ecosystem, and we just don't have enough cyber warriors, do we, Wendy? So this is a big challenge for us all. So Tan, tell us how you have solved some of the nightmares for us. Give us an understanding as to how others can get started on this journey.
Yeah, sure. What we're seeing, talking to mid-market businesses, SMBs around the world, is there's a lack of data insights across the board because of the decentralized nature of all the business systems that we have. And regulatory changes are asking customers to provide proof of security controls. And companies simply just don't have the resources and know-how in this era where cyber is a very a highly rewarded and rare skills. So what we help is help businesses take the first step. Importantly, take the first step because knowing your risk to have that informed view to take the first step is the most difficult part. But once you've build out your landscape and understand what's at risk, then you can prioritize a plan to suit your business goals and then track progress. And we recommend that every business uses an efficient and automated approach that doesn't burden your staff or require massive resource uplift. And that's essentially our solution. We help automate all that data insight and retrieval, and from then contextualize the risk for you so that the board and management can know what to do first.
Fantastic. Well, I've been hearing all the pings about upcoming meetings, and I realize we're just on the hour. Thank you, everyone, for joining the conversation. What I'd like to do is to invite you to reach out to Dexterian to learn how you can mitigate your risks, to definitely talk to Yusan, because he will certainly keep you, or go his best to keep you out of an orange jumpsuit. Obviously, upskill with Eric, build your cyber warrior and risk resilience teams with Wendy, and of course, get your Bitcoin and cryptocurrencies in arm with Elle. Thanks everyone for your time today. We look forward to speaking with you again soon.